Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of September 2nd through September 6th, where we'll try to help you make money trading in September of 2024. So let's get started. So here's our Google document with our notes for our part one of our weekly trading game plan for September 2nd through September 6th. We keep our notes for our weekly trading game plans in publicly accessible Google documents. Our notes documents contain links to bonus videos, the tools and resources we use to come up with our trading strategies, our trade ideas, etc. for the week. You can find a direct link to this Google document in the description box below. We keep all of our weekly trading game plan notes Google documents in a publicly accessible Google Drive folder, so you can refer back to the notes for this week as well as the notes from previous weekly trading game plans. And again, you can find a direct link to that Google Drive folder in the description box below. Good morning, Fairchild. Thank you for joining us. Hope you had a great trading week and are doing well. So firstly, we'll look at how the markets ended up on Friday for the week, the last week of August. So we see all the indices kind of choppy during the day, and then we had this surprisingly strong market on close, green candle on all the indices. So all the indices ended up strong into the end of the month. Again, that was a little surprising given the long Labor Day holiday weekend. But again, we saw a lot of buying right at the end of the day. So the Dow ended up 0.55, NASDAQ up 1.13%, and the S&P up 1.01%. We had 65% advancers, only 30% decliners, had 90% new highs, less than 10% new lows. We've got almost 70% now above their 50-day moving average, only 30% below. We've got 67, about 2/3 above their 200-day moving average and less than a third below. So again, a very bullish end to August, very bullish end to the week. See most of the Mag 7s very strong into the end of the day, with the exception of Apple a little bit, pretty flat. Meta and Google also positive. So, it's, I think on CNBC, they said a sea of green. So all very bullish, all very positive again for the end of August. Welcome, Sydney Osborne, the Ricky Khan. Thank you all for joining us. Hope you all had a great trading week and are doing well. So if we look at some of the news, tumultuous August leaves investors unscathed. Wall Street rally rises, soft landing stakes, closes, stocks close higher Friday, post fourth straight winning month. So again, S&P had 4 straight winning months, so a pretty strong August. Saw oil break down below 75, bounce has got some support at 72, resistance at 75. Saw some news about OPEC possibly increasing their production going forward. I think that might have been part of the dip. Natural gas been pretty range bound between 2 and 220. Saw gold break down slightly below 2550. It's been hovering right around 2550, 2560. We'll see very topping, and we can see all of the futures for the indices are all currently pointing positive. See the Treasury yields bounced up a little bit on Friday. See prices declined slightly during the week. Yields bounced up slightly during the week. So we've got the 30 at about 4.2, 10-year slightly below 4%. See Bitcoin dipped below 60K again. Welcome to your old pits. Thank you for joining us. Hope you're doing well. So if we look at the breakdown of the major indices and then also the technology components within the NASDAQ, just a quick reminder, you can find these screeners in the screener sheets of either our ETFs or Watchlist Google Sheets, and also in many of our notes documents. So if we look at the major indices, we see the Dow was very strong, made new all-time high, testing that upper trend line. So again, a lot of strength in the Dow, not so much in the Russell. So it hasn't retested its previous high, but it did recoup the losses from early August, and it looks like it's now hit some resistance around 220. Again, SPY relatively strong for, it recovered again all its losses from early August. Again, I think the monthly gain for the S&P was about 3%. NASDAQ, again, not as strong. It's kind of hovering around its shorter term moving average, got resistance from a downtrending trend line. So again, although the Mag 7, etc., there's been some oscillation in there, some strength there. The NASDAQ really hasn't gone very far. Did fill the gap again from that loss from early August, but again, pretty flat at this point, just kind of hugging that moving average. Welcome, Katon, trader also known as Easy Mike. Thank you for joining us. Hope you're doing well. So if we look at a breakdown of the technology components, again, these are all the leverage long ETFs on the various technology components. Let's see, ARC did recover its longer term or shorter term moving average, but then pretty much got resistance from the longer term moving average. Pretty flat, hugging its moving average. The FANGs, again, although we've seen, buy the dipping on the Magnificent Seven, etc., on the FANG stocks, they really haven't gone anywhere recently. So got resistance with the shorter term moving average, downtrending trend line. So again, oscillation chop in the buy the dips in the Mag 7s, but it's really not going anywhere. Similarly with semiconductors got resistance with that longer term moving average, the shorter term moving average still coming down. So it hasn't tested its recent high. So we saw a lot of whipsaw action from the NVIDIA earnings, but again, that didn't really move the SOXL index a whole lot. Biotechs popped up to that upper trend line and pretty much chopping along, testing that upper trend line. It's got some room above the moving average. It did fill the gap, hasn't really tested that pre-August high yet. So it looks pretty flat at this point. Talked about the Qs in general, so TQQQ. Broader technology, again, a little bit weaker. It's down below its short-term moving average, got a downtrending trend line. It's got some room above the longer-term moving average. So again, the broader technology sector also a little bit weaker. Welcome, Walter Lyons. Thank you for joining us. Hope you're doing well. Okay, let me grab a quick drink and we'll look at the groups and the sectors and the indices, try to industries, try to see where the sector rotation is going, if it's moving out of technology into other sectors. Thank you for sharing those top ETF inflows and outflows, Easy Mike, Katon. So if we look at the groups and the sectors and the industries in FinBiz, see, on Friday, we had a mixture. We've got consumer cyclical, but again, that's probably some of the Mag 7s, technology. So again, a buy the dip in the Mag 7s. Some industrials and financials have been strong. Real estate's been rebounding. even though we had a bump up in bond yields, rates, utilities strong. The only weak sector was energy, again, probably from the dip in oil. For the week, financials, industry, industrials, utilities. So again, all have been strong sectors, relatively defensive. The weakest for the week were technology and cyclical. So again, Mag 7s. So for the week, they were negative, although again, we see that Friday sector rotation from the laggards to the leaders on Friday. So they rotated back into particularly the Mag 7s into technology. But again, for the week, more defensive sectors, Dow sectors stronger. For the month, again, financials, technology, defensive. So we got a mixture of technology and defensive sectors. The only negatives really were communication services, energy slightly positive. So again, we're seeing a lot more strength in the Dow, the defensive sectors, some rotation out of technology. Look at the industries, internet retail, utilities, uranium rebounded somewhat. Some of the REITs positive, again, a little surprising given the bounce up in bond yields. REITs generally positive on Friday. Gold, again, retraced a little bit from that 25.50, 25.60 level. Coal, a little negative. Oil, negative. Mining, silver, again, we'll see silver rejected off at 30, turning back down. For the week, we've got coal, some of the REITs. Gold, a little slightly negative. Copper, negative. Again, silver rejected off that 30. Uranium was negative for the week. Pharmaceuticals, very negative for the month. So for August, got utilities, REITs. Gold pretty positive for August, silver positive. Oil just slightly positive, pretty flat. Uranium pretty flat, slightly negative for the month. Steel negative. Coal and oil. And again, so strong negative in pharmaceuticals. So we'll see what September brings. If we see a rotation back into some of those laggard sectors. Welcome, Logan Flips. Thank you for joining us. Hope you're doing well. So next we'll look at some of the economic data from last week, some of the upcoming economic data for next week. So I'll open up the calendar and then we'll go over some of the highlights from last week. Just also a quick reminder, as the important economic data news comes out, try to capture that and post that in the Surf the Markets channel in our Discord. Our Discord's free to join. We'd invite and welcome and love to have your participation in our Discord. And again, you can see as that important economic data comes out, I'll try to capture it as quickly as possible, post a screenshot and the raw data in the Surf the Markets channel in our Discord. So again, we'd love to have you participate in our Discord. And also talk about all kinds of topics related to trading and get real-time economic data. So last week I didn't have a whole lot. Monday, Tuesday, Wednesday. Thursday we got a mixture of GDP data, PCE data, and jobless claims data. So if we look at the jobless claims data first, you can see it was a little better than expected, pretty in line, but a little better than expected. So initial claims 231 versus 232 expected, continuing 168 or 1868 versus 1870 expected. So again, both the initial and continuing, and the average decreased slightly, 4-week average decrease. So this says the job market continues to be relatively resilient. So the Fed doesn't have to worry about a spike up in unemployment. And we got one batch of the PCE data, inflation, producer inflation data was better than expected, so 2.8 versus 2.9, so trending downward. So again, positive for the Fed, headed towards their 2% target. And we got a revision to GDP data was better than expected. So again, the economy relatively resilient, jobs market not deteriorating quickly, and inflation trending downward. So all positive. Also got consumer spending up a little bit, PC prices down a little bit. Then Friday, we got the rest of the PCE data. So core PCE in line year on year, a little better than expected. Index a little better than expected. So again, this is one of the primary inflation factors that the Fed looks at is core PCE. So it's trending down. So again, positive for the Fed's battle against inflation. So that should lead, towards some rate cutting, but with the employment market not deteriorating too quickly, they don't really need to rush into drastic cutting. Again, just a quick reminder, none of our content should be considered financial advice. We're not financial advisors. All of our content is for education and entertainment purposes only. Again, my opinion, this would lead towards the potential for a small September rate cut. But again, I don't see the need for, a 50 basis point or more or any kind of emergency cut based on this data. So we also got Michigan sentiment and some spending data. So spending pretty much in line. Michigan 1-year inflation expectations went down, trended down slightly, still down below 3%. Longer term, 5 years still at 3%. Expectations the same, or up a little bit, but as expected. And sentiment just up slightly, a little better than expected. So again, consumers less concerned, about high inflation, except for longer term, pretty stagnant, and their sentiment expectations are improving just very, very slightly. So again, all generally positive. So again, that probably fed into this better than average historical August performance and should bode well going forward. So let me grab a quick drink and we'll go over the rest of the economic calendar from last week, and then we'll look at the economic calendar for next week. Just a quick reminder, if you didn't already know, the markets are closed on Monday in observance of Labor Day, so we hope you all enjoy your long weekend, your long Labor Day holiday weekend. So if we look at some of the other economic data from the last week, got some bill auctions, little bit weak. Housing prices dropped, so that's a positive as well for inflation. Again, note auctions, money supply pretty stable. Crude oil stocks decreased more than expected. So again, we still saw a drop in price. Mortgage rates 6.44, so mortgage rates coming down. Mortgage applications up a little bit. So again, as mortgage rates come down, more home buying, more mortgages. Crude oil inventories down, but less than expected. Still got Fed officials talking, so that will create some volatility in terms of when how much are they going to cut in September. Talked about PCE and jobless claims data, spending, pending home sales pretty negative. So even though the mortgage rate came down, not a whole lot of pending home sales right now. Natural gas storage up a little more than expected. Again, natural gas been pretty stagnant between about 2 and 220. We talked about PCE data and Michigan sentiment. Baker Hughes oil rig count, pretty stable. Total oil rigs decreased a little bit. So again, not a whole lot of change there. Good morning, The Crow. Thank you for joining us. Hope you had a great trading week and are doing well. So if we look at the economic data for next week, again, markets closed on Monday for Labor Day. We've got some construction and some manufacturing data, so we'll see if the front end of the supply chain continues to weaken. We've seen it weakening, so weakening of the economy going forward. Mortgage data on Wednesday, import exports, durable goods, get jolts. So this will be relatively important. See if the job market is deteriorating, if the supply and demand is coming more in line. Something Fed Chair Powell's been commenting on more frequently the past number of months. Also get job cuts, see if we're getting more layoffs, and we get ADP. Employment data. So again, Wednesday, Thursday, we get jobless claims. So again, we'll see if the jobs market is deteriorating any further. Again, if so, that could create some significant volatility. And Friday, get non-farm payroll. So again, a lot of important economic data Wednesday, Thursday, Friday. So after everybody comes back from their long holiday, gets a day or so to get acclimated again, then we'll be back into focusing on economic data. Still have some earnings. We're past NVIDIA earnings. So again, we saw some whipsaw action after that on NVIDIA. Didn't seem to propagate too much into the rest of the technology sector as a whole. It was actually seemed to be a benefit to some of the other semiconductor stocks. So, and then we saw strong buy the dip on NVIDIA as well. But we still do have some earnings coming up. Should be winding down, so you can see if there's any specific companies reporting earnings that may impact your trading. I've got some Zscaler, GitLab, some smaller technology companies, HPE, Hewlett Packard. So again, C3 AI, so that'll be an AI reaction. So again, you can go through the whole list at investing.com. There's UiPath we've talked about recently. So we'll see if their path to profitability improves any. That might be a little interesting. So again, you can go through the whole list at investing.com. There's Kroger, so grocery, Big Lots. Saw some news that they may be considering bankruptcy. We'll talk tomorrow also about impact on Dollar General, Dollar Tree, again, Big Lots. So again, you can go through the whole earnings calendar in investing.com, and also you can hear, not only does earnings matter, but specifically their guidance, also spending on AI. Are they getting benefit from AI? Will impact those companies, and again, related companies as well. So again, you can hear how we make money trading when earnings matter, and earnings again definitely matter. You saw the reaction to NVIDIA, even though they beat and raised, it was less than people expected, and so a pretty negative reaction, even though the earnings were generally very good. Again, when you have excessively inflated expectations, if they don't meet or beat those expectations, you can get a negative reaction. So also just a quick reminder, the next FOMC meeting is September 17th and 18th. will get their interest cut decision at that point, and also a dot plot and SCP, so we can see the trajectory of their rate cuts going forward. So again, we'll see oscillations in the probabilities, of different magnitudes of rate cuts as this economic data comes out this week. Okay, let me grab a quick drink and we'll go look at the market screen in Webull. Just a quick reminder, if you're not already using Webull, they're still offering 75 free fractional shares of stock and a 7% interest rate, so a bonus 2% interest rate for 30 days if you open and fund an account in Webull. If you fund it with 25K, you get the 75 free fractional shares, 7% interest rate. Under 25K, 20 free fractional shares, you still get the 7% bonus interest rate. And these fractional shares are worth $3,000 to $3,000. If you're not already using Webull, we use it for our market analysis, our due diligence, majority of our trading. And if you'd use our affiliate link in the description box below, you can get all of these fractional shares, bonus interest, and also help support our BeachBum trading community, which we greatly appreciate. I'm using the online browser version of Webull. This is the market screen, the online browser version. So we can see the distribution of advancers and decliners. So 3,800 advancers, 2,400 decliners. Percentage of advancement, pretty small. So again, even though the indices ended pretty strongly, the percentage of advancement is relatively small. Thought it was interesting, again, this inflow. So we saw a little bit of positive inflow in the NASDAQ early in the day, and then a steadily increasing outflow until we got to the end of the day. And again, we saw that market on close, so bumped up a little bit, but we saw a pretty steady inflow into the NYSE. So past couple weeks, again, we've seen more inflow into NYSE, money outflow out of the NASDAQ. So again, seems to be a near-term trend that we're seeing and a reversal from what we saw several weeks ago. Again, just a quick reminder, you can also see the near-term earnings calendar, also dividend splits, etc., in the calendar section in Webull, so you can keep an eye on very near-term earnings reports. Looked at the best performing industries for the week. See consumer goods, which is led by Berkshire. Interesting, they categorized Berkshire there. Coal, pretty positive. Insurance, aerospace defense, transports, banking, pharmaceuticals, positive here. Utilities, consumer, household, kind of slightly split, negative. So kind of a diversification mixture. We don't see a whole lot of technology. So again, we're seeing a rotation into other sectors, out of technology into other sectors. So important to keep an eye on that rotation. Okay, ETFs. Again, thank you, Easy Mike, for sharing the top inflows and outflows. So right now we've got the TQ, so up on the Qs, up on the Dow, up on the SPY, so up on the Dow, up on S&P, mid caps, less so, and up on the Qs. YCS is down on the yen, down on the VIX, up on small caps, up on the Russell, up on small caps. Welcome, Douglas PC. Thank you for joining us. Hope you had a great trading week and are doing well. So we look at the industries. So industrials, again, very strong. Healthcare, pretty strong. Financial services, utilities, communication, real estate. Little weakness in energy. Little weakness in basic materials. Looks like a recovery in lithium, copper, bounce back in uranium. Technology. Semiconductors, so mostly led by semiconductors. Consumer cyclical, so online retail and defensives. So commodities, aluminum, corn, we'll see that rebound in corn and wheat, aluminum, corn. Okay. So now we'll also look at the futures. Just a quick reminder, you can now also trade futures in Webull and get further information via that discussion in our Discord. If we look at the futures in FinBiz, again, we see that strength in the Dow. Futures pretty close to its all-time high again. So again, recovered all that plus some, and it's back to mid-July all-time highs. A lot of strength in the Dow, not quite so much in the S&P futures. Seems to be support at 5,600. Some resistance right around 5,650. So again, pretty flat, but it did recover and break above where the dip started in the beginning of August. So again, more flat in S&P. Again, not so much of a recovery in the NASDAQ. Didn't really make it back to retest that 20,000 level yet. It may bounce up and retest that, or again, seeing a near-term downtrending in technology in the NASDAQ. Russell, again, didn't quite make it back up to where it started in August. So again, looks like it's pretty flat. Got support around 2,200 or so. In Nikkei, most of the foreign indexes pretty much recovered where they started from in August. So we'll see if that holds or trends down. Again, we'll look at the seasonality for September and what that may mean for these indices. Looks like the DAX did recover and break out. Not a whole lot of volatility. Again, the VIX futures, again, below 16, been kind of oscillating between 15 and 16 or so. Although I think the actual VIX is right around 15, so the VIX futures now are a little bit ahead of the VIX, which is a reversal from what we were seeing. The VIX futures were quite a bit behind the actual VIX. Again, we saw oil break down below 75, got resistance at 72. Looks like it's making lower highs, lower lows, so we'll see if that trends back down. It breaks 72 and drops to 70. Natural gas, again, been pretty range bound between about 2 and 220. So just a lot of volatility, a lot of chop, not a whole lot of trending. Again, gold's been hovering right around that all-time high, around that top, 2550, 2560. So again, consolidating along that top. We'll see if it tries to break out again, or if we get a more meaningful retracement. Like with silver rejected off 30, so pretty heavy resistance at 30. Looks like it's trending back down. Decent support at 29. Again, pretty oscillating between that 29 and 30 level at this point. Copperhead bounced up. Looks like it might be rolling over a little bit. Palladium trending up. Platinum down. That's interesting. And corn swinging back up finally. Similarly with wheat. Again, wheat kind of bottomed and bounced up. Looks like it broke that heavy resistance at 550. If that holds, we'll see if it'll trend further up. Again, we're still long wheat with the WEAT ETF that we can take a look at. Again, looking for a longer term swing, but again, it needs to hold that 550 level. Sugar bounce, a strong bounce back up. Again, bond yields perked up a little bit. Bond prices dropping back down. Get a little surprising given rate cuts coming. So, but we saw again all the bond longer term rollover more so. 10-year pretty flat, 5-year up a little. And the dollar didn't quite make it down to 100, bounced up back over 101. So we see the reactions in the foreign currencies. Yen hasn't really gone very far since that carry trade unraveled, so it kind of peaked out, rolling back over, possibly retest that recent low. So again, I hope that all helps. So once we identify a potential opportunity in the futures and the market analysis, etc., then we can look for ETFs, whether it's a long idea or a short idea. We'll jump over to our ETFs Google sheet, and we can identify ETFs to trade, again, either long or short in any kind of index, commodity, even individual stocks. Again, the theme, and you can get 24/7 access and do likewise by using our ETF Google sheet, by joining our Patreon at the All Access or VIP level. So I don't have any additions to our ETFs Google sheet this week, so let me grab a drink and check the chat if there's any particular, again, ETF topic theme that you all would like to look at specific ETFs for. If you put those up in the chat, we can take a look at those. Okay, the crow's pointing out one. I'm sure that's a leveraged ETF on Alibaba. So let me see if we have that in our ETFs Google sheet. Again, you can search for any of them in the main sheet or in the research sheet. Do a Control F find, and then you can jump over to the research sheet. We don't have that one. We can look at it very quickly in Invis. So this is a 2x long on Alibaba. So if you're interested in trading Alibaba 2x long, there's this Granite Shares BABX. I don't know if you know the crow, if there's a short, corresponding short on Alibaba. See, it doesn't have a lot of volume. It looks, choppy. It is optionable, pretty high expense ratio. Pretty negative performance this year. Map to the performance of Alibaba, so you can see how they're trading that 2x on Alibaba. So 1.75, the daily performance of Alibaba ADRs. So again, if you're looking for an ETF to trade Alibaba, this is a 2x long. So again, thank you for sharing that with us, the Crow. Again, if you know of a corresponding short, let us know. Again, we have a number of single stock ETFs. So if you're looking for ETF, so you can possibly short in a retirement account, etc. And you can find these in either the main tab. I know we have several NVIDIA longs, shorts, different degrees of leverage, Tesla, etc. Or in the research tab. So again, if you're looking for a way like in a retirement account to short a stock, you might be able to use an ETF, might be able to find a leveraged ETF in our ETFs Google Sheet. So again, I'll try to keep an eye on the chat if anyone has particular ETFs you want to take a look at. Talked about wheat, again, wheat and corn. Again, we're already long wheat, so you can see the risk reward profile. You know, it's not huge on wheat. We're looking for a longer term swing. Longer term swing, risk reward's a little bit better. So again, you see the long and shorts on the yen. Again, we have ETFs to trade various foreign currencies, euros, the different foreign markets, etc. All the different technology components, commodities, again, natural gas, gold, silver, etc. So and we talked about Mexico, been pretty volatile. We were watching that. We talked about gold. We have several long and short gold. So again, I'll leave this up, oil, palladium, etc. All the indices, again, single stocks, so Teslas, NVIDIAs, etc. Some with leverage. So again, you can find one with the risk reward profile, the amount of leverage you want, in our ETF Google Sheet treasuries, etc. So again, I'll leave that open if anyone wants to look at any other ETFs. We'll get ahead to our theme for this week. So again, our theme for this week is making money trading in 2020, in September of 2024. So we're just starting into September. So we want to see what the historical seasonality for September is. So we'll look at our typical graph. Again, this is now the newer graph for a breakdown over the past 5 years, 10 years, 20 years, and since 1950. So we can see, again, typically August was pretty flat, slightly positive in the past 5 years, and we saw this August was positive. Most of the indices, I think, were up about 3% in August, but then we see historically September is the weakest month of the year, and in the past 5 years, it's been weaker than even the past 10 or 20 years. So again, the past 5 years, September's been a very negative month. So again, after we get that, trend up in the summer through July, very positive, August slightly positive. Typically, historically, we get a very negative September, and then historically we get a rebound back into October, November, and less so December. So again, historically, September is the worst month of the year. So, and again, not financial advice, but in my humble opinion, given the indices have been all running near their all-time highs, I would definitely, have protection, protect your profits. If you have any hedges to the downside, historically, that would be a strategic move in September. Again, past 5 years, it's been even more negative than the previous 10. So Again, then we see a rebound into October. So even though we'll talk about the October effect, we'll look at the September effect as well and talk about that. But again, historically, September tends to be very negative. So again, my humble opinion, be careful, protect your profits, protect yourself. And again, you can get more information about the September effect, why that has a tendency, why is September perceived to be negative, etc. You can get more information about how the stock markets perform in September and the best performing sectors and industries in September, and our previous discussions of how to make money trading in September via the links to that previous videos in the notes. Also found another article that I wanted to quickly share in Investopedia, what they call the Hamptons effect. So let me open that up and we can talk about that. It talks about trading specifically during the Labor Day week. So, and we'll quickly take a look at that. Okay, and again, you can find a direct link to this article on the Hamptons effect in our notes. So what is it? It refers to a dip in trading occurs just before Labor Day weekend, followed by an increase in trading volume as investors, traders return from the long weekend. So again, you can hear this is back from 2021. So you can hear their discussion of why that's the case. Wall Street traders going to the Hamptons for the weekend, etc., coming back first to the dip. Summer destination for wealthy New York traders. This can be positive as portfolio managers place trades to firm up overall returns towards the end of the year. Again, I was a little surprised with that strong buying activity on Friday just before Labor Day holiday weekend, especially going into September. Again, we know September historically is very negative. So that was interesting. It's a calendar effect. So again, then you can read some more of the historical data on the Hamptons effect. But again, the main takeaway I wanted to share was that we tend to get a dip in activity before Labor Day holiday, followed by an increase, and that we might get a rally due to portfolio managers coming back and setting up returns toward the end of the year. So again, for this Labor Day holiday weekend, hopefully that'll give you some trade ideas, some trade strategies for the Labor Day holiday week. So again, I hope that helps. And again, you can read more detail about the Hamptons effect, its historical significance, etc. So again, I hope you find that interesting and helpful. We also have been talking, and we just looked at the trends for trading in the summer. We've been talking about how to make money trading in the summer. So we're wrapping up the summer now. We'll transition into how to make money trading in the fall. But again, you can hear our previous discussions on how to make money trading in the summer via those videos. Okay, got a couple minutes again. If anyone in the chat wants to look at any other ETFs, if you have any other topics, trading strategies you want to discuss, any individual stocks you want to take a look at either today or tomorrow, please throw those back in the chat. If I missed your question earlier, I apologize. We're the ticker. I apologize, and please put those back up in the chat, and we can discuss anything further you would like to today. Yeah, I see the Crow commenting on some of the leveraged long and shorts for gold that we typically talk about. So again, in our ETF Google Sheet, we've got a number of ETFs that you can use to either long or short gold. Our preferred ones tend to be GDXU long, GDXD short. Similarly for silver, AGQ long, CSL short. So again, you can find those. Those are leveraged ETFs, long or short on gold and silver. So, and again, Crow has been successful with making some money trading gold with GDXU and GDXD. So again, congratulations on all of that, the Crow, and we hope it all helps. GDXJ, I see Easy Mike mentioning, which is a junior gold miners. I think we have that probably in the research sheet. GDXJ. So again, you can find the risk reward. We also have several other ones. That's GDXD. So there's GDXJ. So this is a non-leveraged on junior gold miners. So you can see the risk reward profile for that in our research sheet. It's got some others, ounce, etc. Also mentioned corn. I didn't look at that one. Talked about that recently. Risk reward profile is not that exciting, but and if you caught that swing back up in corn, it's got a 1.4 short term, 4.6 longer term. Looks like it's swinging back up. And we'll talk about MP materials tomorrow. We were watching REMX. Mike's mentioning REMX. Again, we'll look at MP materials again tomorrow. So our REMX we were watching, but it hadn't performed very well. Looks like the Google Finance functions aren't responding for that one right now. Okay, anyone else has any other last minute topics or ETFs you want to take a look at, please let me know. Otherwise, you can always put those in the comments to any of our videos. If you want us to take a look at a stock, ETF, etc., you can put it in the comments to our videos. You can also always tag us in our Discord. Our tag in the Discord is BeachBum Trading, all lowercase, no other characters. So it looks like we've got one imposter I need to get rid of after we finish. So that one's us. BeachBum Trading, all lowercase, no other characters, symbols, numbers, etc. Also, we would not direct message you without letting you know in advance, and we would not ask you for money in our Discord. So please ignore and report anyone who does, as they're an imposter. You can also always contact us via our social media sites. You can find links to all of our social media sites on our homepage, beachbumtrading.com, bum without the U. So again, you can find the free invite to our Discord and links to all of our social media sites, all on our homepage. We also need your feedback as to what we can do to improve our weekly trading game plans, any of our videos, our tools, our Google Sheets, our community, etc. So please provide us with your feedback on what we can do to continue to improve, to add more value for all of our fellow BeachBum traders. I hope you like this content. I hope you will smash the like button, help us try to get the YouTube algorithm to share our content with more traders around the world. We'd greatly appreciate it if you directly share our content, repost our postings, videos, etc. to your fellow traders, invite them to join us in the live chats, in the Discord, etc. so we can help each other out, make money trading, help you all succeed in your trading career. So tomorrow we'll take all of this data, market analysis, and we'll select our top swing trading stocks to watch, stocks in our bullpen, stocks in our shopping list. We'll also talk about how we can use dividend payers and several option strategies to also generate income while we wait for our top swing trading stocks to set up. So thank you again to everyone that joined us in the chat and everyone who's watching after the fact. And again, we hope to see you back tomorrow, same bat time, same bat channel, 10 a.m. Eastern on Sundays for part 2 of our weekly trading game plan for the trading week of September 2nd through September 6th. So thank you again and have a great day.